Into this beautiful trade here on the Nasdaq 100 futures, looking to take profit at 868 3/4, which is an area of imbalance resting right up above us. So, and my stop loss is down there at 844 and a half. It's off an area of demand, taking it off the Nasdaq 100 futures. Welcome back to the channel, everyone. Thank you for tuning in. Let's jump right into the video here. We're taking a look here at the Nasdaq 100 futures. Took a few trades today in these areas or zones that I have marked here, and I'm going to go over both of, well, actually it was two trades that I actually took, one here and one here. This one here I mentioned would have been a good trade to actually take off the Nasdaq 100 futures, and I'll cover that because some members that are part of the Discord community had a hard time or had interest in that zone, but had a hard time trying to figure out where to get into the trade at. So we'll take a look at that for those individuals as well. If you're interested in joining the Discord, the link is down in the description portion of the video. Please take the time to go ahead, scroll down, look at, click on the link and invite yourself in. Yes, it is free to join the Discord. If you want to become an elite channel member or elite channel supporter, either or is what I call it. You can do so by finding the link right below the Discord link, okay? And at the end of the video, I'll talk about the elite, the private community for those that want to become elite members and what's included. Now, like I always say, you have to master market structure, guys. It is the most imperative, the most important, the most crucial part to trading. If you have a hard time reading the markets, I'm just going to say it, you're going to fail, all right? Point blank, I'm going to be blunt. I don't care what strategy you have. Yes, the strategy may work, but it's not going to work unless you are able to read what the market is actually doing, okay? Everything in how I trade, the strategy in how I trade, which I always talk about. Gracious, look at the number of videos on the channel. I put out so much content because I want to see people succeed and become consistent. And yes, you know, strategies actually work, but you have to spend time practicing on the charts. But first and foremost, when you start educating yourself, okay, regardless of where you turn to, you need to understand and grasp market structure. Oh, Mike, what is that? You need to understand the flow of the market. Which way is it currently moving? What's the long-term trend? What's the short-term trend? Can I trade against the grain short-term and take some scalps? You need to understand the direction of the market so you can trade accordingly, all right? Now, I always state, if you're a beginner trader, look to trade in the direction of the market. Meaning, if you're bullish, look for bullish trades, okay? If we're bearish, like we are now, look for opportunities to take short opportunities. Now, the things that I also talk about, there are and how I trade supply and demand. But one of the most important aspects, important components to the markets as a whole, the trading, which, you know, is all the banks and institutions care about, is liquidity. They like to set up traps of liquidity, and they like to take liquidity, okay? Meaning taking your money, all right, for all those watching that are retail traders. So let's talk about the few trades that I took today, my reasoning behind it, and you know, just kind of give you just a rundown so you can kind of prepare yourself and things to look for as well. Now, I've been going over some good information, and I'm not sure if you guys are watching the videos, so get out your pen and pad, take notes, watch the videos in detail, not just one time. Go back through them. I cannot tell you the number of times that I've had to go back and watch my own videos, you know, because before I started doing this YouTube thing, I was only recording videos purely for my own self, meaning where I could go back, reflect, like a, you know, like taking notes, having a book, but I was able to electronically record my trades throughout the session, so I can go back and see, okay, I made a mistake here. I needed to tighten up on that and make some better choices going forward. So watching the videos help. Now, I'm not telling you have to learn things from me or sit here and educate yourself through watching the videos, which a lot of people who are part of the Discord community, they have simply spent time watching the videos that I put out on the channel and educate themselves. And many of them are consistent and profitable traders today. Okay, if you don't believe me, come over to the Discord and ask. All right, so let's jump into it. Let you know what I saw. Of course, what you can see here, I trade range-based charts, okay? And, you know, I just see the market moving to the downside. That's all it's been doing, okay? We've been breaking structure. If you don't know what breaking structure is or what breaking structure means, or you know, how is it, or why is it a crucial component to, especially the way I trade and the strategy and how I trade, you need to go back. I would say watch yesterday's video. I did a video on breaking structure, talking about it, you know, basically breaking things down in terms of the market breaking structure and pushing through areas, because the tide can change at any given point, but also how that liquidity piece is tied into the market and why it's such an important piece of trading. So what I saw here was that, okay, we made a low here into yesterday's session. We pulled back. I mean, we started pushing higher yesterday. Yes, we broke some, started breaking structure to the upside, but you've got to always look at things from a bigger aspect. Are we going to really continue moving to the upside? And it's okay to take trades going long as long as we are moving to the upside, okay? Meaning breaking structure to the upside. But if you pay close attention here into the overnight hours, okay, into the early hours of the morning, we broke this low down here below 17,791. So what most people would do would be looking for pullbacks to do what? To go short. Well, the market goes up as you can see it doing, and it's testing areas, okay? It's testing these small areas. That was a small area of demand resting right there. Small area of demand resting right. I'm sorry, guys, not demand. I meant supply. Please forgive me. Supply, not demand. Okay, aggressive selling, and aggressive selling. Now, the thing about trading, like I talked about, think in terms of liquidity. Most of the time, someone has to lose in order for the market to continue moving in a certain direction. We broke structure to the downside right here. This is a range right here, okay? This is a big range, and the market starts moving lower, making lower lows and lower highs, breaking structure to the downside. All this in between, this bigger swing, is internal structure. You have to be able to see even all this crazy stuff that goes on in a swing like this. You have to be able to see visually what's going on with your own eyes to be able to see, okay, we broke a major area of structure. All this is in between is internal structure. And then we start moving back to the upside. You can look for retracements to do what? To go short at key areas of supply. But think in terms, you want to see something being taken out. Most times the banks or the institutions like to grab liquidity before they'll start making a run back to the downside. It could have been here, could have been here, could have been here, but it just all depends, because now right here in this area here where it made this low and broke structure, as the market started pushing back up, we started tapping into and moving. We were into the London session. So the market, all it was doing was pushing higher. It did reject this area right here, which is a beautiful area of supply right here. And it's untested. It's a gap back at the zone. And it rejects that area. But if you look what's right below, we have that round number of 900 right there below it. So be careful about taking trades. If you're looking to go short, right into a round number, a half number, or even a pivot like a 40-70 pivot area, okay? So then the market continues running to the upside here. And, now we're into the pre-market, pre-session hours of the U.S. session, getting ready to open up at 9:30. The market, pulls back here, and then it pushes higher. Now, I'm looking to see what it's going to do. Are we going to continue pushing higher? At this point, I'm asking myself and break this area structure above here at 987, or are we going to continue trying to make a run back to the downside? This is where people get trapped or get confused at, we broke structure to the downside. Now it looks like we're going to be moving to the upside. I'm going to be bullish. We're still bearish, okay? Look at the bigger trend looking out on a higher base chart, or even higher than a 60 range if you want to. Like it could be, whatever you want the chart to be. I have a 120 range chart up as well that I'll take a look at, and you can see clearly with all a lot of this noise, if you want to call it that in a sense, to where it looks, you can see where the market is really bearish, what I'm trying to say. So I'll show you that right quick. So look here, you see this is the area right here. You can see where we had the break of structure right here. Okay, it didn't break this area of structure right here. Okay, it's a high here that it has to take out. If it does take that high out, then we could be looking, okay, now it's just broke structure to the upside, meaning taking out this swing high right here. Then definitely I'd be interested in looking for long positions. But my mind in speaking, I'm looking at taking shorts, all right? Even though I did take a long, and I'll talk about it here, okay? I'm going to tell you why. All right, let's move back down to the 60 range. So the market starts to move lower. Now, what takes place here? Well, it broke structure above this area right here. You see that? This is an internal area of structure within this bigger swing right here. It did break structure inside of this swing, okay? Right here when it pushed up to the upside. But then it starts doing what? It starts running back to the downside, making lower lows and lower highs, and we start to take out some structure to the left side of this leg right here. Okay, so we were already, bearish. We did break some internal area structure back to the upside right here, and because we did that, even though when we started moving back to the downside and taking out, structure, these are areas of demand right here. This area right here. All right. As you know, these were areas of demand. This one here and this one down here. Those were areas that I was interested in. And I'm looking at what's right above us because I know we're taking structure out as we're moving lower here. So I'm just looking for a quick scalp. That's all I'm doing there, okay? That's all I'm doing. So that trade that I showed right at the beginning of the video was right in this area right here. And the reason why I'm going to bring this box out a little further out, this is a demand area, aggressive buying, 1 candle, 2 candle, 3 candle, aggressive buying in this area that aided in this area or structural break or internal structural break right here above 952. It rejects this area here. Now, if you notice here, this candle here, this candle here, this candle, 3 candles right here, there is a imbalance rested in between that area. So that's the reason why I took a quick scalp going long. And I told myself if it gets back to this zone here, as long as it rejects, and I look at my lower base chart and I see rejection, I'm going to go long at this zone right here, okay? Now, if you don't know about what I look for when it comes to full-on confirmation of rejection on my lower base chart, which is the 12 range, because I like to use multi-chart confluence, meaning marking zones off of a higher base chart like my 60 range, and then moving down, scaling down to a lower base chart, which is my entry chart, to look for the remaining portion of the steps of the setup to take place. And that is the rejection piece, to where I like to see a breaking structure occur, a pullback to a key area, say, of demand on the lower base entry chart, the 12 range. And then as long as I get rejection, breaking a close of a candle above, then I'm going long, okay? And so when I saw rejection here on the lower base chart, I went long. Simply put, I mean, and I was just aiming for this area of imbalance resting up here at 868 on my higher base chart right here, okay? So that that trade that you saw at the beginning of the video, this is it right here, okay? And we go up to, I believe, 868. I don't believe I closed early. I think I went ahead and allowed it. I think it went up there and definitely hit my my profit target there. I'm pretty sure. Yeah, it hit my profit target, and I picked up 18 points, right? But remember what I said about liquidity. I always like to see if there's going to be some area of liquidity that's been taken out. It kind of fuels things up, recharges things for the market to, if it hits a key area and there's rejection, for it to move back to the upside, and for it, in the intended direction in which I was looking to trade from, even for a short scalp, okay? But I took it from this area here back up to here to 868 to fill in that imbalance right there. And this right here, if you see this here, this was a move to the upside that aided in this break above this internal area of structure within this bigger swing right here. You saw we got the break to the downside. The market starts to move higher. It takes out this high here, which is internal structure. This move were leg to the upside, all these swings in between, which were areas of demand, okay? These little inducement areas, all right, that aided in this impulse move to the upside, okay? All these areas here, when the market started pulling back and started taking out, these areas, is collecting or tapping in or taking out areas of liquidity, okay? Or grabbing liquidity is what it's doing back to the downside. And at some point I said, if there's a nice area of demand below and we get a rejection, I'm going to take a quick scalp, all right? So I was just looking at price action as it was coming back to this area right here and waiting for a confirmation to get into the trade just to take it back up and fill this imbalance right here. Because as you see right here, the market never broke below when it came and tapped into this to that zone right there. If you see here, this one below here, it did. And you hear me talk about low probability and high probability. Did the market pull back to the, well, yes, this area of this zone right here, I would classify it more as a low probability area for sure. But I always talk about it can still reject the area. It can still reject it. Even though it could be a low probability zone, the market does come back to it. You just wait for the confirmation rejection. A lot of people have to really spend time in focusing on looking for the rejection. Everything has to come into play. Everything has to line up. All right. Just don't jump into the trade. Wait for the rejection to see if you get confirmation on your lower time frame or lower base chart to take the trade from. Now, the next trade, which I didn't take this trade here, but people did comment on the Discord. I did throw it out there and say, hey, this was a beautiful area to go long at, all right, for a scalp, all right, because we are bearish still because we didn't break above this area here, this swing high at 987. So we're still bearish, okay? But again, for those that know how to counter trend trade and take trades, even though we are, bearish and can trade, for a quick scalp to go long, this is a good area to take a trade from right here. Now, again, this is an area to where the market was pushing higher. This is a demand zone resting down here at the bottom here. And let me say this too, just as well, because I didn't mention this earlier. You see right here, and I said this in yesterday's video, I believe it was, about liquidity. When the market is moving back to the upside here and taking out this internal area structure, this little swing right here where it pushed up, okay? So it pushed up, pulled back, it broke slightly higher right here, then it pulls back, okay? And so it pushes down, pulls back, and makes a little low here. It took out a little area of liquidity right there. So these are the type of things I talked about the breaker structure setups. Basically the three classic ones that I like to see. All right. If the market comes back to an area to where I see that it took out an area of, where it took out liquidity as it was moving back to the upside to take out an area of structure, and then we retrace as we were tracing back to that area. This was where liquidity was taken right here as well. It is a demand zone resting right here. So basically what I'm saying is I like to see if there is a zone where liquidity has been taken out prior to, and where there was a demand, okay, where there was demand that was created off of that little zone there or at that zone there that aided in a breaker structure to the upside, taking out this internal area structure right here. Those are the type of things that I look for that kind of give me more confirmation. Did we take out any area of liquidity on any swing back to the upside where there was demand or that formed an area of demand? Okay, right here. These are small little areas. I bring it down. That's why I marked this zone right here as well. Look what happened here. Pushed up, pulled back, broke higher, then it swung down, pulled back, and broke and took out a small area of liquidity. It swiped that area right below there, okay? Didn't close it, but it broke below it, grabbing liquidity before it moved to the upside with this bullish move, this momentum bullish move to the upside, and all this aided in the internal breaker structure right here. So that's why I marked the zone just as well. These are good things to look for. Now, the better trade, if you got into this, was going to be right here on this test right here. And the reason for that was because when it did come back, if you see right here, if you can really see it, this candle right here didn't tap 100% into the demand zone. All right, it did right here. So a lot of times, if I'm looking at my lower time frame or lower base chart, then if it's a few ticks away and I get the rejection, I'll get into a trade. All right, I talk about that in a lot of videos. But in this case here, being that it got right here on my higher base chart, I still probably would have taken this trade here just about 1 or 2 ticks away from tapping into the zone. But I would have had to get confirmation on my lower base chart. Again, this right here was the better. Let me put it to the tick here. All right, let's do this. You got to really see this and see that there is a small little area. I don't believe it tapped it. Let me see. Let's see. Yeah, it was just like one little tick right there before it actually came back and hit the zone right here. This was the better opportunity right here. Now, if you got into the trade right here, all right, then you may have gotten where you probably did get stopped out if you put your stop somewhere in this area here because it came back here. And that's the reason why I believe if you did get stopped out was because if you got into the trade right here, you got into it early because it didn't 100% come back and tap into that zone on the higher base chart tick to tick. Okay, so waiting for that tap is always important. I know I get aggressive sometimes and I get into a trade, but I'm looking at what's above me as well to see possibly where the market could actually bounce at. And one thing up in this area here is there's a half number. So that's why I always talk about before you get into a trade, size up the trade, okay? Knowing what's above you and what's below you, okay? Are there any hidden pivot areas? Is there a round number? Is there a half number? You got to see these things before you jump into a trade. You got to think in all aspects of the markets, okay? What's above? They love to bounce at half numbers. They love to bounce at round numbers, okay? So when the market comes back to this area here and finally hits that zone and taps into it 100%, that's where that's where the rejection takes place at. Again, it taps into where liquidity, an area where liquidity was taken out, all right, right here before a bullish move to the upside, and then we get that breaker structure above that 987 area above us, okay? And so this right here would be a nice zone to take a trade from when it taps into it 100%. If you're someone that's new or beginner, wait for the zone to be tapped. Okay, because a lot of times people get into a trade aggressively or way too early, and if you get into it too early and you don't have that, I mean, now when I say tap, I mean that full on tap to the zone, then you're going to find yourself probably getting a little bit of trouble because you may have a hard time getting out of the trade early, trying to ride it out, or don't know how to get out of a trade quick enough or soon enough or early enough before it comes back and takes out or breaks below your break even and then takes out your stop. A lot of people don't know that they ride it out. And then they start praying that the market, turns back around and goes in the direction. A lot of times it just stops them out. So you have to know, but it still worked out either way. I mean, you got to know what's above here, and that's that half number. So it goes up there pretty much, and it almost bounced right at the 50 area around about 49. And then it pulls back, taps into the zone 100%, and then it runs to the upside to around the 60 area, and then it starts moving lower there. Now I'm on my 12 range chart because I want to show you that small little area where it didn't 100% tap into it right here. This is the zone right here on the 60 range. You see, if you move down to the 12 range, it didn't tap into it. So this is I threw it out there and I said, I personally already got aggressively and got into the trade. But I'm just looking for a quick scalp, and I knew that 50 was right above it. So that's all I'm really looking for, is to see if it'll run up there and test that 50 area. And then I already got out for sure, but also because we had that half number up there. But, and I knew that it didn't fully tap into the zone. But this was when it finally tapped and rejected, because you see the rejection taking place right here. When you said, Mike, what do you mean rejection? Well, look what it did. It pushed up. It broke above this area, structure here at 822. And then what does it do? It comes back and tests this, an area of demand in this area right here. Okay. Demand, aggressive buying to the upside. And then that was your takeoff point for it to go back up to the upside right there. Simply put. You see it. I mean, it's shown here. Look, the 60 range zone, 12 range zone, taps into it, rejects, breaking close of the candle above, you're long. So if you got into this trade, let's just say you got into the trade maybe somewhere around 823, 824, look where it went up to. You could have picked yourself up 40 points, 20 points right there, or even more, because it comes back. Your stop probably was resting below here at 817. And, don't ever put a tick to tick. At least I recommend that. Give it a few points, because that's how the Nasdaq or the banks would like to do. They know people are going long right here. They'll come back to that right there, tick to tick, stop you out, or maybe just a 1 tick, 2 ticks past it, and then push the market right on up. So they do. So that what they did was pull it back right here. They know people probably got their trade right here, somewhere in this area. Let's say your break-even point was right here at 823. Guess what? They ran past your break-even point. They never stopped you out, though. They pushed below 3 points below your break-even points, and then it goes up there from 820 all the way up there to 859, 860 area. So then it goes up there 40 points. You have to understand and see these type things. I'm not gonna tell anyone how to trade. I know people get chickened out and get scared, and even when you get into a trade, things kind of start getting a little bit. You start getting nervous, but that comes with experience and time, and those type things will kind of slowly dissipate. They'll never go away though. But, that's why I feel comfortable in this trading the way I do. And I love trading just 2 contracts. Sometimes I go on 3 or 4, but I think that people who start trading with a lot of contracts, it's like, why would you trade with a big, amount of contracts or a large lot size when you only have but so much capital to really trade from? You have to do the math and see does that even make sense, or break it down. Anyway, all right, so moving on. I mean, of course, you saw this. This was an impulse move to the upside here, and then we get a breaker structure. That's clear as day. We were already bearish. So the best trades to take were trades to go short, not long. So anyone that was, if you're a new trader, beginner trader, and you're looking to go long, I'm not saying you're wrong for doing so, but again, you are kind of wrong for doing so, because of the fact is don't put on that kind of risk. If the market is bearish, which it is bearish, look for shorts. Wait patiently for the better opportunity to go short. There was a breaker structure that occurred here, right here at, let's see here, 10:55, right before 11 o'clock. It broke right below here. You've got to see this. Look what it did. Low, lower high, break structure, pullback, break structure below here at 17,770 or 777. Okay, well, that's a lucky number there, right? Let's see, right? 17,777. Couldn't get no better luck than that. Already bearish. Luck broke right there. This was the supply zone. Beautiful supply setup, untested, gap, back at the zone. This was your golden trade right here. So if you are taking longs, all right, and you don't have enough skin or in the game, enough experience, why were you going long? Yes, because I went long. Guys, I've been doing this for 13 years. I know what I'm doing. I know what I'm seeing. I know what I'm looking at. I know even the smaller breaker structures and what's unfolding. I mean, everything. You know, when it comes to smaller areas of internal breaker structures, I'm looking for, you know, the liquidity piece, everything. I know what I'm looking for, you know, and I'm taking my opportunities if I see rejection, okay? A great, even zone that's against the grain, that is, you know, counter trend. Do not counter trend trade if you are someone that is not profitable yet. I'll put it just like that. Wait patiently, wait for the bigger moves based on what the market is actually already doing. Are we bearish or bullish? We are bearish. Then wait for the bigger structure breaks like this right here. All this in between mix and stuff here, that was just internal structure, just to break this. This is how they move, to fool you, to confuse you. You knew that this was a low. Why? Because it broke that low there. So it broke structure. So if this is the new low right here, then see if it's going to break that. If you get that break there, then all this beautiful area of internal swings to the downside, internal breaks of structure to the downside that aided in this break below here at 776. Then wait for a golden opportunity to get the bigger break and then the pullback. This was just a landslide to the downside right here. Just beautiful orders that were, the market was just selling off to the downside. There's a gap resting back there, like I said. Wait for it to get back there. Boom! The moment it tests that thing and you get the rejection down on your lower time frame, you get that breaker structure below to a pullback to an area of supply, like I talk about in the strategy. Take your shot going long. I mean, excuse me, not long, going short. Aiming for the lows back down here and grab it. Look, in this area here, let's say you got it at 840. Comes all the way down here to 17,763. You've got to do this stuff and visually see it, okay? You know, it doesn't matter how much someone who has experience spends time with someone. A person will never get it if they are unable to see it, all right? You can't hold someone's hand forever. They've got to be able to see this stuff. And it does take time. It doesn't happen overnight. Some people, yes, they get it sooner than others. But I'm breaking this stuff down so you can grasp and get an understanding. If you are not consistently profitable, wait for the bigger moves. Wait. I say this, and I don't know how many times I probably said this in videos. What is the market doing? Are we bullish or bearish? Look at your higher base chart. If you're bearish, then only take short setups. All right? I've said that a million times. Do not trade against the grain if you're not consistently profitable and you have a hard time reading the markets. Wait for the market to show you its hand. I'm sure you probably played cards before. All right? All right? So if you play cards, you should, you kind of get that feeling and understanding that, feel something out. Wait for it to happen before you make your move. All right, this is the game of chess, and you've got to be on your P's and Q's, and you got to be smart about this stuff. So I can talk about this stuff till I'm blue in the face, but one thing for sure I can't do, I can't take my mind and put it in someone else's head. They have to be able to see this with their own eyes, and not everybody's cut out to do this. The saying that only 5% or less make it in this business, it is the pure truth. Okay, I'm gonna leave it here. Seriously, I'm going to leave it here today. The best opportunity for all those that really were looking to trade, were looking for short setups. Okay. And still to this point, we are still bearish. So you see the market doing this right here. All right. Have we, let's see here. You may want to wait, like right here. Okay. We just moved lower. It's forming some area of internal structure, making these internal structural highs as it broke to the upside here. So as it started making, pushing higher, making these higher highs and higher lows, all it was doing was breaking liquidity, back to the upside each time it broke a high. Then it folds to the downside, okay? And what is it doing? It starts to run these areas back to, or starts to move back lower, okay? And then this is your low right here. Wait for it. So everything in between is going to be arranged. These are going to be internal breaks of structure to the downside, okay? All right, which are internal breaks of structure within this swing that's forming right now. You see this formation of this swing right here, and then once it breaks below 615 and a quarter, breaks below there, then look for a pullback to go short. So all you're doing is waiting for something like this to happen. Got the pullback. All right, it's running back to the upside. Boom, breaks to the downside. You got to break a structure below here at 615, say, okay? All this in between, internal structure. Look for a pullback then to a key area of supply, preferably at the upper portion of the impulse move to the downside that aided in this break of structure. When that happens and you get a pullback to a clean area of supply, then look to see if you're going to get the rejection to go short. Following in the direction, following in the trend, following in the move of the market or how the market's moving. Okay, this is market structure. All right, guys. That's all I'm going to say. I'm not going to beat myself up and even cause myself to have a full-on aneurysm here trying to stress this stuff. But you know, hopefully you guys spend time on the chart. Slowly you'll start to see these things. You got to spend time and visualize this stuff with your eyes. All right. This is a art. This is not. There's no science to trading. I'm gonna say that again. This is an art. There's no science to trading. Anyways, I appreciate everyone that watches the videos on the daily. Hopefully, you know, me covering and going through the setups today in a sense, and explaining things from a market structure standpoint. Maybe you grasp it, maybe you understand a little bit more. But if you do not, please spend some time watching the videos. Outside of that, please, if you are not a current subscriber to the channel, please take the time to go ahead and sub by clicking on the sub button. Make sure to turn on all your post notifications so you never miss one of the uploads here in the channel. Now, just want to quickly say this, because they're probably going to be people that are going to send me a DM or send me a message if I don't, about becoming an elite member. If you want to become an elite channel supporter or elite member of the channel, scroll down to the description portion of the video. You'll see a link right below the Discord link that says become an elite member. Click on that. You'll see two tiers pop up. The latter one, because there's going to be two, the one that says elite channel supporter or elite channel member for $6.99, that's the one you want to choose if you want to receive the perks and rewards that come with that tier. And that is the trade breakdowns. That's the video playlist where I've hand selected videos off of the channel so you don't have to watch over 700 videos. And I've selected those videos for a reason, because they really break things down. They go into full explanation about how I trade and provide a lot of good insight. The trade breakdowns, they are what they are. They are breakdowns of detailed entries or trades that I take. And I explain it as if you're sitting right there in front of me, and I'm walking through my mindset or the process of what I'm thinking about leading up to a trade and while I'm in that trade. So if you want to join and become an elite member, scroll down to the description portion of the video, click on the link that says become a elite member, or click on the join button right in front of you. And last but not least, if you found value in today's video, please drop a like on the video. I'll see everyone in the next one. Take care, and please be safe trading.